Hey guys, welcome back to the channel. Today I'm gonna share with you a market outlook related to the US dollar, considering that we have the CPI data today. As the beginning, we are going to look at the economic calendar to have an idea about what may happen from a fundamental perspective, and we are going also to look at the charts from a technical perspective. Just one moment only. So if we are going to refer to the charts, the only important events for today were the CPI data from the US. We have consumer price index ex food and energy, monthly and yearly data. It is expected to slow down up to 3.7% from 3.9%. Consumer price index, it was 3.1% and is expected again 3.1%. However, related to these indicators, we have to be very careful today. During the previous week, the market didn't react at all. Just one moment. During the previous week, the most important event was the non-farm payroll data. And as you can see, it was higher than expected. So from 200K, it came in as 275K. The employment data are showing for strong growth on the market. This is suggesting that probably the Fed will not cut the interest rates anytime soon. However, the inflation is under control, but what happened is that the market didn't react very well related to the US dollar. So during Friday, we saw only a small price reaction on the US dollar, and the gold moved on the opposite side at all. So it was a complete different situation here. That is why we have to be careful, because the first indication was the non-farm payroll data that is showing that probably the Fed is not going to change interest rates in June meeting, because the focus is all about the June meeting at this moment. And the next one that the market is already discussing during this moment, just one moment again. The next one that the market is focused are the CPI data that we have today. The problem is that the CPI data and employment data are really important when it comes to a possible rate cut or possible rate increase. If we are going to take in consideration that the market, that the CPI data will slow down to 3.7%, probably we may see a weaker US dollar today. However, we should understand that as long as this indicator is coming under control, it means that the US economy is doing really well. We have seen also the GDP data to growing month after month. We have seen employment to increase month after month. So everything is really good in the US, and in my opinion is one of the countries that is performing really strong. Also, the Canada governor said that he was surprised about the US performance. So it doesn't make sense for the moment for the US dollar to be in this difficult situation. If the CPI data will come in at 3.9% or a bit higher, for the US economy it will not be good at all, but it will give another indication that the Fed may hold the interest rates for a longer period of time where it is right now. So let's see what is going to happen from a technical perspective as well. During the previous days, I have shared with you dollar index analysis, also is in a combined idea. It was shared on March 4th for the last time. And after the bearish breakout, the price moved down from this point. So it was as expected, because also the bigger picture was showing for more downside. In the current conditions, we can see that the dollar index already broke out from a strong structure zone. So overall, this is showing for more downside. If the price will respect this area here, it can move down further. However, if the price will develop in this way, how it moved before, the chances are that today we may see a possible bullish correction. So this was the movement that was created before, and we may see dollar index to rise a bit more. In this way, probably we can be in this movement. Just one moment. We can have this type of development that may happen. We should understand that for the moment we are in a corrective process. On the other hand, the speculation is still very high with the US dollar. It is not clear how the market may react during the CPI data this time, because the speculation is really high despite the good data that the US keeps reporting. But if the price will continue moving down, this is a possible scenario, and probably the first area where the dollar index may face resistance will be at 103.5 approximately. So this is a possible scenario. We may see a slight bullish movement on the dollar index. However, I wouldn't like to trade ahead of the news, because this is going to be very important. We have the accumulation from the non-farm payrolls data. They came in higher than expected. Price didn't react. We have the CPI data, so it will be a bit difficult because the market can release both volumes at the same time. This is what I'm looking at for the moment. On a lower time frame, the dollar index is showing that it may increase more from this small flag pattern. Probably it can continue with the bullish movement, but for this move, the price should hold above this area here, above 102.8 approximately. However, let's see. It will be very interesting movement. If the price will not manage to break through 103, because it is still in this zone, if we are going to look at in a different perspective, then the bearish movement can continue further here. However, let's see one step at a time, because it's too early to anticipate an aggressive bearish move against the US dollar. From the previous analysis that we have on Euro USD again, we can see that the price is already rising as it was shared before, and 1.0980 proved to be very strong again. In the current conditions, we are still in a very complex moment. The price is already facing a strong resistance close to 1.0980. Overall, Euro USD is still bullish in the same way as the dollar index is bearish, and it can continue rising further from this point. However, if we are going to switch this to a higher time frame, we can see that on the past the price found a very strong resistance on the daily chart. This is something that, in my opinion, we have to be careful, because it is not clear. It's still bullish, but it can face resistance, and it can create also any strange move as before. This is a possible scenario, but it comes without confirmation. That is why we have to be careful from this area here. So far we are still in a bullish zone. As you can see, we have structure zone where the price stopped close to 1.09, and this is showing for a possible bullish move. However, also on a lower time frame, we can see that the price is only accumulating. It is not clear if it will continue moving down or up from this point. Probably it can create any bullish move and it can rise further. However, exists also the possibility that we can see a secondary test in this area, and later we can have a release of liquidity from Euro USD. That is why we have to be careful at this moment, because the non-farm payrolls didn't push the price higher. The next one that we are going to look at is GBP USD. We are going to look GBP USD on a daily time frame. It looks very interesting from this perspective, beginning from 1.2827. We can see that the price was in a bullish movement here. Just one moment, please. So from this perspective, we can see that the price is showing for a bigger bullish movement. The top 1.2827, it was reached at the end of December. As you can see, this was 28th of December here, and the price moved in this zone for about 70 days. So it was a very big accumulation and without a clear direction, and so far we have a bullish breakout, and this is raising the chances for further growth. Probably it will not happen with one day or within 1 week to reach the top at 1.31. The price may develop in different ways before it moves here. However, at this moment we have an idea that GBP USD should continue with the bullish trend after the breakout. Usually GBP USD tends to create very ugly price developments, but as you can see at this moment, after the breakout, the price is moving down, and the chances are that we may see GBP USD moving down further today. It can retest the structure, and probably during the coming week we may see any bullish movement, or it may continue to create something different. However, I'm going to update this again. We are going to look at this, what is going to happen. I'll update after the CPI data, but the overall picture, I'm expecting GBP USD to rise more. 1.29, this small structure will be the first target zone, 1.2940, and 1.3 as the first major areas. The next one will be the top of the structure. So let's see if we are going to increase pound US dollar on a weekly time frame. The price began the bearish movement when it was at the top, when it was close to this area here on February 2022, and I think that on the bigger picture the bullish potential is even higher, and GBP USD should reach that point. However, it's a bit early for that movement, one step at a time. So far we have to see how the price will come down in this pattern here. This is for the next one. One of the guys is asking about gold. What do you think about gold? I will explain also gold. I posted also during the yesterday analysis. Thank you everyone for joining. I would really appreciate if you are going to hit the like button, and please don't forget to subscribe on the channels below under the comment section. Thank you. The next one that I explained also yesterday is gold. From the yesterday analysis that I explained with many details, we can see that gold is getting manipulated in a really crazy way. So we can see that the price moved up to 21.95 without any reason. So definitely this was without any strong reason. The market is speculating that China is buying gold at this moment, probably the major banks and so on. What we can see is that this is a clear manipulation for very simple reasons. The price is above all the big events that we have during the past 4 years. COVID-19 on 2020, war between Ukraine and Russia on March 2022. We had the banking crisis, which was also very important for the banking system, for everything that is related with the financial system, and it was never invalidated as a zone. So it doesn't make sense that we face the first speculation because the Fed is going to cut the interest rates. And here we have another false speculation that the Fed is going to buy interest rates. If one of the central banks is already on the buy because they want to cover expenses related with wars, related with COVID or everything else, I don't know what is happening. But it doesn't make sense because this is a dirty job from their side, because they are literally killing the retail traders account. And also from articles in the market, we can see that it was not expected also as a seasonality movement. If we are going to look at to compare gold and silver, they are not in line at all with each other. Silver is undervalued, and this is a clear sign that only gold is pumped at this moment. As a precious metal, silver is too far away. It doesn't make sense that we may think that the market is moving on gold because we are in a difficult situation. If you can see this map, that is why I prepared. We were in difficult situations before, but so far the US is only going to cut the interest rates, and they must cut the interest rates, in my opinion, during this year, because it's very expensive and it will create a lot of problems on the future related with loans, individual loans, business loans, and so on. So it can create more pressure. During the previous time that I shared this, we saw that after the non-farm payroll data, the price reached this point here. I'm sure that who is trading gold in an active way saw this rise up to 2021.85. It moved down, and later, after some hours, so we are 1, 2, 3, 4, after 4 hours after the news, the price increased up to this level here, and this was at the moment that the dollar index didn't react in this way. So this is something very different. As I explained also during the yesterday analysis related with gold, the first indication for a possible reversal could have happened after the breakout of this channel. This is what I was explaining yesterday. And so far, gold is already moving down. The problem is that we can never anticipate a bullish or a bearish movement when something is manipulated. And we are in a clear manipulation here. We have to be very careful. Probably 21.95 was the top for gold, and from this breakout we may see a bigger bearish movement, and probably gold will create bull trap here. However, also the sell at this moment is very, very difficult, because we can never know how, let's say, this major bank that is creating this manipulation, because they can add more on their equity. Probably it can happen that we may have a bigger bullish pattern. The price may get manipulated again, and we can see another higher high, because we are not gold is not related only with the technical analysis right now. This is more speculative. That is why we have to be careful. However, if this pattern is going to work out well, probably we may see the beginning of the bearish movement. This is how it looks like again on the weekly chart, and it doesn't make sense for gold to rise further. So this is where we are on the bigger picture about gold here. However, from yesterday the price moved down up to 2170, so it looks really good. What was a real surprise, I want to check out US 100. As you can see, during the non-farm payroll data, this was a real surprise. The price increased only some points, and we saw this bearish movement. So on the opposite side of gold, US 100 moved down. It was bearish on this movement. So as long as the US dollar was strong, it doesn't look good that gold created a new all-time high after some hours, but on the other hand, all indexes moved down. The same thing is happening also with the US 500. As you can see on this chart, during the non-farm payroll data, the price was here above the pattern. It had a bullish breakout, and at this moment we may see that later the price moved down, and it was a very big move overall. It was approximately 3%. And in this situation, we are still waiting for the next movement. That is why we have to be very careful. However, for indexes, everything stands in a different situation. In my opinion, we have to be very careful, considering that all indexes are in a very strong bullish trend. On the daily chart, it's very risky to sell and to anticipate a bearish movement. We have to be careful overall because it can change the price direction, but it has to develop more because the bullish trend is very, very strong. So I'm not sure if it will change from bullish to bearish very quickly. However, for today, if the price will break down 17,840, probably we may see any sell-off on US 100. The first zone can be found at this point here, 17,375, and this structure zone here, 17,150. So these are the two areas where we can focus for a possible bearish move. However, for the moment, we have to be very careful. We have to see the breakout, because from this price position, we may see US 500 to US 100 to rise further. So let's see what is going to happen today. This is all that I have prepared related to the US related pairs. Gold has more potential for a bearish movement. Look at how this is reacting so far. The price broke out from this small structure that is located at 2174. Probably if this is going to stop the price below this small area here, this will increase the chances for a bigger bearish movement. So let's see what is going to happen with gold. Be careful, because the first zone will be found if the price will move down. If you are going to take the risk on the sell side, is very risky. The first zone will be found at 2144.45, and the next one, where the price will face very strong support again, will be found in this area here, 2087. However, it's a very risky sell, because we can never know how the market may react ahead of the CPI data. So that's all for today. I hope you guys enjoyed the analysis. Thanks for watching. Please don't forget to hit the like button and follow. Thank you so much again. Bye bye.